Hello and welcome to NDTV Profit, and with me is Mr. C.S. Setty, the chairperson at SBI, and we're talking about the Q3 numbers, and everything stood out here. Net interest income was good, asset quality went well, and even the PAT numbers are very high. Just if you would give us the key takeaways, from this Q3 earnings, and this PAT numbers, is it having any one-offs also?
Thank you, Sharad, first of all, for having me on your channel. I think we try to take care of many things in terms of containing the cost of resources. That's a primary lever on which we worked in. How do we contain the cost of deposits, cost of resources, and then also focus on the credit growth. If you see, the net interest income has gone up by 9%, while maintaining the NIM above 3%. I think it worked well. There have been a lot of contribution coming from the fee-based income and non-interest income, whether it is recoveries in return-of accounts and the LC/BG income. I think the whole streams have contributed. I did mention last quarter that we have quite a few levers. This is in spite of 125 basis point repo rate cut in the last 12 months. So I believe that we have done, and also on the asset quality side we have not compromised. We have contained the credit costs. So it's a good story. I think the team has really worked well. As far as one-off is concerned, yes, if I have to talk one-off, I think the special dividend from SBI Mutual Fund, even if you do not consider, I believe it's a good set of numbers.
Right, that analysts beat estimates on that PAT front as well. But what about the NIMs, and also is there an upward guidance coming in for the credit growth?
We did look at the credit growth, which is happening, that continue to happen in the current quarter also. And I believe that, the trade deals which have been announced are extremely positive for investment climate. Looking at that, we upped our guidance from 12 to 14%, what we have given earlier. For the current quarter, we have given the guidance of 13 to 15%.
Right.
We will definitely revisit this guidance in the next quarter for the full year, but for the current quarter, we are revising the guidance to 13 to 15%.
And what about the NIMs? You have perennially maintained that 3% mark, and this time also the domestic NIMs were 3.1%. So we expect this long-term target to go ahead?
Our long-term guidance is through the cycles.
Right.
I think it's safe to assume that we're still sticking to guidance of 3%, above 3% NIM. Hopefully, I think we'll be able to maintain that.
And sir, there's always the retail growth has been there. We know about it, the RAM segment as we call it. But the corporate side, has that green shoot started coming in? And because now the trade deals are also complete, we'll have some kind of external help or a push coming as well. And SBI is leading from the front. So I just wanted to get your view on the corporate side of it.
So we did have a good corporate credit growth this quarter, Q3. But it was primarily driven by the consumption climate, which was favorable because of the GST rationalization or income tax benefit which is given. That had helped the corporates to increase their sales, and obviously it gets reflected in the working capital utilization, and also a bit of brownfield capital expenditure. But definitely, I think we are all pinning our hopes that in terms of the positive climate which is created on account of the trade deals, would further enhance their appetite for capital expenditure. That I think we should be able to see a little uptick, and that is also giving us confidence that guidance is strengthened by that positivity.
And sir, I just want to talk about the CD ratio as well. There's a lot of concerns coming in that the Indian household savings is moving towards other places like mutual funds also as well. And a lot of bankers which I spoke with, they have been very shy to talk about it, but you have been very vocal about it. So what's your view on that?
SBI is well positioned in that front, I think, because of the large franchise and humongous trust the brand enjoys. Our renewed focus on the deposits, I think we are able to hold on to our 9 to 10% growth rate on a very big base of 57 trillion. I think the point which I have been trying to make is the structural shift which is inevitable, which has already happened.
Right.
if you see today, the mutual fund growth rates are 3x as against 1x of the deposits. I think this is irreversible in my view.
Right.
There could be some shifts here and there based on the performance of the markets, but unconsciously households are thinking in terms of the asset allocation.
Right.
You may not even think about,
Right.
they're not thinking, itna deposit mein rakhna hai, itna, but I think unconsciously they're moving towards that.
Sahi bole, sir.
So-
Mr. Setty, one last question. Since we're speaking on mutual funds, timelines for the SBI mutual fund IPO, entire street wants to know about it.
We are moving on the right track in the sense that, whatever steps have to be taken towards that, we are on track on that, and we have time, board approved time up to September 26. So I think we are confident that we should be accessing the market well before that.
All right. Thank you very much, Mr. Setty,
Thank
for
you.
giving your time and talking to NDTV Profit.
Thank you.
Best of luck for the future.